Did you know you can make a lot of money, a full-time income, a living off of trading just one trading pattern? The trading pattern we're going over today is called the double bottom. You've probably heard about the double bottom before if you've been in trading and watching a few trading videos. But this video is going to go into what other trading videos don't. It's going to go into what they miss, and it's going to go into the reason why you may be trading the double bottom but not making money on it. So we're going to start off by defining the double bottom. Then we're going to get into the types of double bottoms. And then finally, we're going to go into the mistakes that traders make when they're trading the double bottoms. Mistakes that you might be making right now. And we're going to correct those so that you can start making money off of the double bottom trading pattern. Now, the double bottom trading pattern is essentially a reversal pattern. So the price comes down to a level, okay, then it comes back up, but then it comes down again, touches that same price level a second time, and then it goes up, but this time it keeps going up, okay, to an uptrend. So this is why traders like the double bottom so much, because essentially with a double bottom trading pattern, you can buy at the bottom, okay, you can buy at the bottom of whatever price level that you're trading, and then have a really good risk to reward ratio, which is what we always want as traders. We want to be able to risk very little and make a lot of money. Okay, that's the goal. That's the goal of our trading group. That's the goal of our private trading group. That's the goal of any trader who wants to make money in the stock market. Now, if you're trading just to gamble, I won't be able to help you. This is a trading channel for traders who like making money and want to make money. That's why we're able to call out multiple short squeezes like SERA, a short squeeze we called out that doubled last Friday. Okay, and it's Monday now, it's a holiday, but last Friday we called out a short squeeze on SERA in our pro Discord. So if you're not part of the free Discord, go ahead and join it in the link below. We have a webinar coming out where you can actually trade. It's a $150 value. You can actually trade side by side with me this Wednesday. This is not something I do every single week. This is something which I'm offering to you, so don't miss out on this. It's like leaving money on the table if you don't come to the free trading webinar that's just going to be fantastic. We have so much stuff lined up for you, so much goodies, so much knowledge, stuff that you cannot receive on any other trading channel. Now let's go back into the double bottom pattern. The double bottom pattern has different types. A lot of people think there's only one double bottom. No, there's multiple types of double bottoms. So the double bottom normal is just a revisit to the same price level. Okay, everyone knows that one, but there's other types as well. So there's also the double bottom trick. This one comes lower, but then it still has the same result, okay, which is a reversal to the upside. When a double bottom is happening, the stock is going down. So you have to think after the double bottom occurs, if the stock starts going up, then that means that there's a reversal, and that's why the double bottom is considered a reversal pattern. Now there's one more type of double bottom, and that's when the stock comes up and then starts going up before it actually comes to the price level again. And this is called the SOS double bottom pattern. So one more time, we have the normal double bottom, we have the normal double bottom, we have the trap double bottom where it comes lower, then we have the SOS double bottom where it doesn't even come down all the way before going back up. And so these are the three types of double bottoms. Generally, the best of these double bottoms is going to be the SOS double bottom. Okay, so this is the one which is the best. Why is it the best? Because there is an urgency to buy. There's a buying urgency here. The traders couldn't wait for the stock to come all the way down to the level before they push the price back up. And that's why the SOS double bottom is, in my opinion, the best type of double bottom. Now, one example of the double bottom, we can actually look on AMCX here, and we can see here. Okay, we can see the price. We can actually see two sets of double bottoms. So we have the price come down here, and then it comes down, but it didn't come down all the way, and then it came back up. And then it came back down, and again, it didn't come back all the way, and then it came up and up and up, and it continued that into an uptrend, right? So this is a good example of an SOS double bottom because the price never came back all the way down to where the price was before continuing up. So another way of looking at an SOS double bottom is an uptrend, but I consider this a double bottom because if the price is technically coming down at the time when the price starts initiating an uptrend, then this is a reversal. And so I would still consider it a double bottom the first time it happens. Okay, and that's the difference between a double bottom SOS and a regular uptrend. Okay, is that it's a reversal. Okay, so that's just some vocabulary for you. And we have to be thinking also what's happening when a double bottom is taking place. So when a double bottom is taking place, there is an urgency to buy. So all the sellers, all the sellers in the stock market who push the price down, who are shorting the stock, who want the stock to go to zero, those sellers, there's just not that many of them, because they don't actually believe that the price should be lower than it is right now. So there's a disagreement between the buyers and the sellers when a double bottom takes place. And the other side of the coin is the buyers. Okay, so buyers like me and you, we see value in the stock. Maybe we're looking for the double bottom pattern. And so when we see the pattern develop, we'll start buying. Okay, and when we buy and the sellers, run out of juice, then what do you think is going to happen? The stock's going to go up, right? The stock's going to go up. We're going to make some money. So that's why the double bottom pattern occurs, and that's why it's so powerful, because it's a mixture of sellers running out of selling power and buyers like us becoming stronger and more plentiful, able to push the price up and allow everyone to make money, except for people who have short positions. They are not going to make money in an uptrend. But that's besides the point. The point is, with a double bottom, it can be very profitable. But there are mistakes that traders make, and I see the traders make this mistake over and over, time and time again. I see traders make these mistakes. They don't actually look at the whole picture. Okay, so there's 3 mistakes that traders make. The first one is traders do not look at the hill. Okay, the hill is essentially what occurs in between the double bottom when the double bottom takes place. So when the double bottom takes place, there is always an area between the double bottom, like this one, where you could see the price action between the double bottom. That is important. That is important because if the price action spends more time going up and then it spends less time going down, and the amount of time it spends going down, it tends to come down very slowly. The bars are very small. That's good. And that's important. It's going to affect how strong the double bottom is. If a double bottom spikes all the way down and it just keeps going down, that can kill the trade. That can cause the trade to fail, and it can cause the double bottom to fail. And so it's very important that we differentiate between a double bottom where it has good price action before the price comes back down to a level, and one that has bad price action. Okay, and I actually saw that happen on Bed Bath & Beyond stock last Friday. Now, what's the second mistake that traders make? The second mistake that traders make is they buy too soon. They buy too soon before the double bottom fully takes place. Just because the price comes back to a level it was before does not mean that it will be a double bottom. Okay, not every double bottom works. Trading patterns occur again and again, but the outcome of the trading pattern is random. It's random, okay? But there are different methods and techniques you can use to improve your chance of success, like analyzing and recognizing the price action that occurs between the two double bottoms, okay, between the two bottoms of the double bottom, okay? That's important, okay? This is all really important, and the reason why so many traders fail, they don't actually learn all of this stuff, okay? All the other traders, all the professional traders, they're learning this stuff, which is why they make money, but most trading channels, they're not going to tell you these things. And that's why it's so important that you watch this channel, you're subscribed, and you do your best to absorb this information, because it's necessary. If you're losing money right now, it's because there's a lot of things that we go over in our private trading group that you're not learning yet, or no one's told you. No one's told you. So it's not your fault that you're losing money, but you have no excuse not to learn from someone who's telling you exactly why you're failing right now. Now, I'm a coach, so I'm going to give it to you hard, but you are going to succeed if you take my advice. Now, there's one more reason why people fail with a double bottom, or why a double bottom fails. And that is because generally you want a double bottom to occur in either the early or middle of the day. A double bottom that occurs at the end of the day is less likely to work than a double bottom that occurs in the early or middle of the day. So typically around lunchtime, if you see a double bottom taking place, that could be a pretty good double bottom. In early on, if you see a double bottom take place, that could be a pretty good double bottom. Late in the evening, near the close, near power hour, that double bottom is less likely to work than the other two types. And so in order to increase your chance of success and give yourself the greatest chance of success as possible, I recommend looking for double bottoms before 12 p.m. on a trading day. I'm using the Pacific Standard Time because I'm on the West Coast. But this has been the double bottom and how to trade it. Okay, follow these rules and techniques. Look at the price action between a double bottom and follow the other rules that we went over. Okay, take this with you. Take this with you. Keep it with you. Join our live trading session, which we're going to do. Again, it's such a huge value, $150 value, and I'm giving it away to you. I'm not giving it away. I'm covering the cost. Okay, I'm covering the cost so that you can succeed in the stock market. And I really hope to see you there. And other than that, though, have an amazing rest of your day. I'll see you guys tomorrow.